Gotta get up out of feelings.
What's going on, guys? It's Mr. DEBT Joe Lorick from the Money Etiquette Group here with another upcoming IPO video for you. And this video is all about Fiverr, F-I-V-E-R-R. This is all about Fiverr. Their ticker symbol will be FVRR. Their initial shares will be between $18 to $25 per share, and they will be listed on the New York Stock Exchange. Okay, that's the basics. I want you to know that first offhand so you don't have to watch the entire video just to get that piece of information. But what's left in this video is very important, so listen up if you want to know about the company. Most people who are entrepreneurs, small business owners, people who can't afford employees know about Fiverr, because Fiverr is the best friend to someone that can't afford employees. Okay, you're talking about a website where you can find people that will do 200,000 plus gigs or services for you, anywhere from editing a book to passing out flyers to budgeting for you to creating an app for you, even doing some administrative work. People will do almost anything that's needed in business on this website, and you don't have to sign a long-term contract with these people. You don't have to pay a monthly fee to get these gigs. You actually just have to pay whatever their service charges for that one time. It's a one contract, one service, one-time cost. And there is certain deliveries that come with it, certain promises that come with that contract. But again, this is a good tool, a great tool for those who can't afford to pay employees. I've used it myself, so let me put that out there first. Now, the way they started, look, all gigs used to be $5. That's where Fiverr came from. You used to get all these services for $5, and then to get a better level of these services, then you would have to pay $10 more or $20 more. Now, there is no minimal cost, so some gigs start at 10, some might start at 50. It's no longer a $5 minimum threshold when it comes to how much they charge for their gigs, but the pricing is still relatively low compared to the general market, which is part of the design. Now, just to give you some context on numbers, there are about 255,000 sellers on the website that do about 200,000 different gigs. And there are about 2.1 million users, active users, that pretty much go to this website and on a regular basis purchase services. So we're talking about something that's used on a regular basis, something that is very popular. Not the biggest company out there, not the most traffic, but nevertheless they do show some level of sustainability when it comes to how they make their money. In fact, their revenues, 57% come from returning users, people who have bought gigs and they come back to use it again, which speaks to the level of service that they have on their website. It means that most people providing gigs are doing a pretty good job, as opposed to if, of course, they had people who weren't doing that great of a job, you wouldn't see such a good return rate. And about 43% are just new users, people who are coming to the website for the first time and then, purchasing gigs. With all that said, this is not a profitable company, not yet. Okay, as of now, 2018, I believe they lost relatively close to $36 million. And before that, in 2017, it was roughly 19 million. So we've seen an increase in losses, which I'm sure the company will attribute to growing. They are a fast growing company. They're a young company. So oftentimes you take on a lot of debt. You spend a lot of money to create awareness. And of course, I'm sure that they will say that's primarily why they're losing money. But when it comes to revenue, they do show revenue growth. In 2017, their revenue was about 52 million, and that grew to 75.5 million in 2018. And even if we look at first quarter 2019, they're losing less money than they lost the previous year. So far, they've lost about 8 million as opposed to 16 million in 2018 first quarter. So they are showing some growth, not only just in revenue, but decrease in losses. But we do know this, keep it in context, they have an IPO coming out. So I'm sure there was a concerted effort to make the company look as profitable or potentially profitable as possible by making sure that losses were minimalized where they could be. That's not a knock, that's what you should do. So I'm not gonna say it's a negative, I'm just saying be aware of that, keep everything in context. When it comes to their valuation right now, the valuation has them at about $500 to $600 million. And they have about 10 to 12 competitors. I would say Upwork is probably their main competition. Some people would say Thumbtack, but Thumbtack is still not quite the same. On Thumbtack, you can look for a service and you could pretty much put that out there, and different companies will bid on the right to get those services. On this one, it's Fiverr is more straightforward. You see a gig and you just pay for it, and that's it. Sellers on here don't have to worry about, okay, I'm competing against 1, 2, or 3 different quotes. No, you just put what you want out there and then people buy it or not. But where on Thumbtack, from a selling standpoint, you're competing with different quotes, so people see 5 quotes at once. It's just a different format as opposed to how Fiverr is used. Now, if you want to think about their longevity, Fiverr is 100% tied into the gig economy. That's what they're betting on. They're saying that the gig economy is not just going to grow here in the United States, but it's going to expand better, more in the UK and Africa and Asia, just all over the world. And I can see why they would tie themselves to that economy, to the gig economy, but we'll see where it goes because it's still a relatively early phase of the gig economy. We don't know if it's going to be around and as popular as it is today in the next 20 years. But Fiverr's saying that they will, and if you're investing in Fiverr, then you're investing in the gig economy. They're directly tied into each other. I will say this, I've used the services. It has been pleasant experiences each time, so I will put that out there. I'm not being paid by Fiverr. I don't get anything by putting this video out there, just like all of my videos, but I do want to put out there I have used the services. I have liked it. Doesn't mean I'm going to invest. I'm going to look at the numbers. We'll see. I'll make my decision at the end of this week. But with these numbers, I want you guys to make a decision. I want to know what you think. In fact, if you used Fiverr before, let me know in the comment section. Let me know what you thought. Let me know if you plan on investing. And also, guys, don't forget to subscribe to the channel. Don't forget to hit the like button, because the more people that see this, the more people can get the information and the more people could jump into the market and just have an opportunity to take advantage of something that they may support or may not support. But again, guys, I want to know what you think. I want to know if you feel like Fiverr is a good investment, if you used them, if you feel like they aren't going to be around much longer and you just used it while it was available, especially at the $5 price. Did you keep using it after the increase occurred from $5 to $10 and $20 and $50 minimum gigs? Let me know from that aspect too. But again, guys, the overall summary, they're losing money. They're tied to the gig economy. They are growing in revenue very quickly. It does seem to be a company that has pretty decent sustainability with 50+%, 57% of their revenue coming from return users and 43% from new, having 2.1 million users that use their services on a regular basis while only having 255,000 gig providers. That's good numbers. So relatively speaking, they're showing a positive trend, but they're tied to the gig economy. So do you believe in it or do you not? Let me know in the comment section. Looking forward to hearing from you.